Let's start with economy from the month of May. Now, Ecowrap Report by SBI. Now, the State Bank of India Economic Research Department has released the Ecowrap Report. Now, the key findings of the Ecowrap Report is that India's GDP growth is expected to be in the range of 8.2% to 8.5% in financial years 2022. Now, states opting for freebies. Several states in the country are resorting to offering freebies like farm loan waivers and restoring to old pension system. Now, Telangana has committed 35% of revenue receipts to finance populist schemes. Rajasthan, Chhattisgarh, Andhra Pradesh, and others have all committed to spend 5 to 19% of their revenue receipts on similar schemes. These populist schemes are economically unsustainable and also limit states' flexibility to spend on development projects. With the GST compensation from center ending in June, the states need to reprioritize expenditure in accordance with revenue receipts. Higher fiscal deficits of the states. Now, the fiscal situation of states have been impacted owing to COVID-19 pandemic. For 18 states, the average fiscal deficit as percentage of gross state domestic product has been revised upwards by 50 basis point to 4% for financial year 22, with 6 states reporting a fiscal deficit of more than 4% of gross state domestic product. Now, there is a dichotomy in growth numbers. States such as Andhra Pradesh, Assam, Gujarat, Haryana, Maharashtra, Rajasthan, Telangana, and West Bengal have shown their real GSDP growth much higher than the overall GDP growth of the country. However, the report pointed to a dichotomy in the numbers, wondering how GSDP for 17 states is higher than the growth in the national GDP. Moving on to the World Economic Outlook Report, the International Monetary Fund has released the World Economic Outlook Report. The report is published by IMF twice a year in April and in October. It also provides updates to these two reports in January and July. The aim of the report is to provide analysis and forecast of economic development of member countries and highlight risks and uncertainty. Now, some of the key highlights from the global report concerns with global growth. Now, global growth is projected to slow down from an estimated 6.1% in 2021 to 3.6% in 2020 and 2023. This is a 0.8 and 0.2% lower from for 2022 and 2023 than in the January World Economic Outlook update. The downgrade is largely due to Russia-Ukraine war, sanctions on Russia, sharper than anticipated deceleration in China, renewed flare-up of pandemic, rising medium-term inflation expectations, and ongoing climate emergency. Now let's look at some of the growth projections by World Economic Outlook April to 2022 report. The global economy is decreasing, advanced economies are also slowing down, but emerging markets and developing economies may rebound to a growth. Moving on, let's see some of the recommendations of the report. Now, multilateral efforts to respond to the humanitarian crisis, prevent further economic fragmentation, maintain global liquidity, manage debt distress, tackle climate change, and ending the pandemic are essential. Now, about India, IMF has slashed the growth forecast for India for the current financial year by 80 basis points to 8.2%, with import bills rising due to high commodity and fuel prices. The IMF estimates India's current account deficit to widen to 3.1% in financial years 2022-23 from 1.6% in financial year 2021-22. Additionally, deceleration in global growth would also lead to lower demand for Indian exports. Moving on to pyramid scheme, the Enforcement Directorate has provisionally attached assets worth 758 crore rupees belonging to Amway India Enterprises Limited. According to ED, the company was perpetrating a scam by running a pyramid fraud. Now, a pyramid scheme is a sketchy and unsustainable business model where a few top-level members recruit newer members. Those members pay up upfront cost up the chain to those who enrolled them, as newer members in turn recruit underlying of their own. A portion of the subsequent fee they receive is also kicked up the chain. In a pyramid scheme, major profit comes from recruitment fee rather than sales of the actual product. The multi-level marketing operations are similar to pyramid schemes with one difference. They involve the sale of tangible goods. As per Consumer Protection Direct Selling Rules 2021, the government bars direct selling companies from promoting pyramid schemes. Now, this is how exactly a pyramid scheme is supposed to work. The recruiter is at the bottommost side and members at the bottom lose their hefty investments while those at the top pocket the money. Moving on, we have special purpose acquisition companies. Now, the government of India is considering a regulatory framework for special purpose acquisition companies to lay the groundwork for possible listing of Indian companies through this route in future. Now, a SPAC or blank check company is an entity specifically set up with the objective of acquiring a firm in particular sector. A SPAC aims to raise money in IPO without any operations or revenue. The money that is raised from public is kept in an escrow account which can be accessed while making the acquisition. If the acquisition is not made within 2 years of the IPO, the SPAC is delisted and the money is returned to the investors. Now, the advantage of SPAC is that a company can go public through the SPAC route in a matter of months, while the conventional IPO process is an arduous process that can take anywhere from 6 months to more than a year. Now, SPACs are essentially held companies, but a key factor that makes them attractive to investors is that people who sponsor them. Globally prominent names such as Dell CEO has participated in SPACs. The owner of the target company may be able to negotiate a premium price while selling to SPAC because the latter has a limited time window for making a deal. Now, there are certain risks associated with SPACs. An investor in SPAC IPO is making a leap of faith that its promoters will be successful in acquiring or merging with a suitable target company in the future. However, due to reduced degree of oversight from regulators coupled with lack of disclosures from typical SPAC will mean that retail investors run the risk of being saddled with investment that could be massively overhyped or occasionally even fraudulent. Moving on to the Special 301 report by USTR. Now, the Office of United States Trade Representatives has released the Special 301 report of 2022. Now, the Special 301 report is a report with the purpose to identify trading partners that do not effectively protect and enforce intellectual property rights. It also covers countries that deny market access to US innovators and creators that rely on protection of their IP rights. Now, the report places countries into a priority watch list and watch list countries. Now, countries that have serious IP rights deficiencies and require increased United States trade representative attentions are placed in priority watch list countries. The watch list countries are those countries that have serious intellectual property right deficiencies but are not yet placed on the priority watch list. Now, the key findings of the report are that priority watch list countries are Argentina, Chile, China, India, Indonesia, Russia, Venezuela. Now, a report on India says that India remains one of the most challenging major economies with respect to protection and enforcement of intellectual property rights. India's accession to World Intellectual Property Organization (WIPO), Performance and Phonograph Treaty and WIPO Copyright Treaty in 2018, and NICE Agreement in 2019, also National IPR Policy, Cell for IPR Promotion and Management were positive steps. However, the potential threat of patent revocation, lack of presumption of patent validity, and narrow patentability criteria under the Indian Patents Act impact companies across different sectors. For instance, in pharmaceutical sector, the United States continued to monitor the restrictions on the patent eligible subject matters in Section 3D of the Indian Patents Act and its impacts. Moving on to the pharma sector growth in India, according to the Ministry of Commerce and Industry, India's pharma's exports have witnessed a growth of 103% since 2014 2022. Now, about the Indian pharmaceutical exports, the pharma exports witnessed a growth of 103% between 2013-14 and 2021-22. The exports grew by $10 billion in 8 years. Now, the pharma trade balance continues to be in India's favor. The pharmaceutical production in India, global rank is third for pharmaceutical production by volume and 14th by value. Now, the current market size of Indian pharmaceutical industry is around $50 billion, and 60% of the world's vaccines and 20% of generic medicines comes from India at present. Now, pharma export destinations. India's top 5 pharma export destinations are USA, UK, South Africa, Russia, and Nigeria. Around 55% of pharma exports from India cater to highly regulated market. For instance, the largest number of FDA approved plants outside the US are in India.